Hi guys, I'm Nicola McKenzie, founder and mortgage advisor here at Dunham McCarthy Mortgages. And in today's video, I'm going to be giving you an insight as to whether or not you can use a loan as your house deposit to fund your house purchase. So to find out more, stay tuned. Now guys, before we get into today's video, if you enjoy this video and you find it useful, then make sure that you give it a thumbs up and make sure that you subscribe to the channel so you never miss a future upload, and hit the notification bell. Now to start off, the short answer to the question, can I use a loan to fund a house deposit? The answer to that would be yes, technically speaking. However, depending on the type of loan you're using and depending on the lender that you apply to will determine whether or not it's something that's viable and whether or not your application will get accepted. Now, it is possible to get a mortgage with a deposit partially paid for by a loan. However, the means by which that you acquire the loan is going to, in most cases, impact on how favourably the lender will look at you from an affordability perspective. And it may have some financial ramifications if you choose to use a loan as part of your house deposit. As I mentioned, it also depends on the type of loan and the lender, but ultimately mortgage lenders will look more favourably in most cases for those who can put down a higher deposit. So for example, if you're contributing to the purchase from your own personal funds, 10%, you're going to be looked at more favourably than if you were to contribute a house deposit at 5%, and so on and so forth. Now, the minimum deposit you need to purchase a property is going to be 5%. But now let's look at some of the different types of loans that you may be able to use and how that might impact on your viability to get a mortgage. Now, before I actually get into the point, guys, it's also worth me mentioning that I do have another video that breaks down different types of house deposits and how that can impact on your application. So I will put links on screen for you to check out that video as well. But I'm going to start by discussing bank loans. This is probably the most common question I get asked. Can I use a bank loan to purchase a property? Now, bank loans or similar are not normally acceptable by the majority of lenders. I can, off the top of my head, think of only one high street bank that would even consider this as an option. Now, in instances where that particular bank may consider a loan as part of your house deposit, you should understand that the mortgage company is going to assess what's called your debt to income ratio. In other words, your ability to repay both the mortgage and the loan, along with any other credit cards and other financial commitments that you have. So if you're taking out a loan, depending on obviously the value of that loan and the monthly payment that that loan has associated to it, that could whittle down your affordability. And not to mention, 99% of banks are outright going to say no on the basis that you are using a bank loan for your deposit. So it's not a particularly common or favourable way to use or fund a deposit for your house purchase. Now, a family loan, whether it's the bank of mum or dad or other family members, believe it or not, would be viewed by most lenders in a similar way to that as a bank loan. Even though your mum or dad or whoever may be loaning you the funds and probably not charging you any interest or very little interest, the point is you're still going to have to make repayments on that debt or loan, and that is again going to be factored in for affordability. So for that reason, it makes a lot of lenders feel uncomfortable because you're basically borrowing money to borrow money, which doesn't sit right with a lot of banks. Now, parents or other family members may want to consider what's called a gifted deposit. That's not the same as a loan. So a gifted deposit would mean that they're giving you the money, but they're not expecting that money to be paid back, and they're also not expecting to have any kind of interest in the property that you're going to purchase. So in most cases, if you're using a gifted deposit, a bank would ask the gifter of the funds to sign a letter to say that they don't wish to retain any interest in the property and they're not expecting those funds to be repaid. And in most cases, as far as banks and lenders go, a gift is fine, depending on who the gift is coming from and certain other factors. And of course, as with any source of deposit, you are going to be expected to evidence the source of those funds as well. Now let's look at a director's loan. Now, a director's loan from your own company, so this is obviously a particularly interesting point for those that own their own company. This can sometimes be a viable route for you to take. However, mortgage lenders and providers will expect you to demonstrate that the funds taken out correlate to the funds that you originally introduced into the business. Now, this might have financial implications that could impact on you and therefore your ability to pay the mortgage further down the line. For example, this will affect the level of corporation tax that you have to pay or your business has to pay, and it could also increase your income tax or taxable benefits in kind. But it is something that could potentially be considered, of course, depending on your overall situation. Now, if you are watching this video, then I assume that potentially you're looking to buy a property using a mortgage, move home, or review an existing mortgage. Now, if you trust the content on this channel and you've been finding it valuable and useful, then imagine the value that you would get from us helping you with your own mortgage. Now, we're here to help you get the best mortgage deal from thousands of products from lots of high street banks and building societies, as well as specialist lenders as well. Compare all of your options to find you the best deals. Now, head over to our website, dm.mortgage, and book in for a free of charge appointment today. We can help you no matter where you're based in the UK, and we can give you your options and provide you with advice so that you know exactly where to go and what to do next. And of course, if you're finding this video useful up until now, then you need to hit that subscribe button and the notification bell so that you never miss a future upload. But now let's get back to the video. Now let's look at a remortgage. So by remortgaging, what I'm essentially talking about is raising money from an existing property that you own via a mortgage. So increasing the mortgage size on that existing property, and then by the amount you've increased it by, putting that towards a house deposit on a new property. Now that is something that again is a common way to fund a house deposit, and in many cases is acceptable by lenders. And even things like bridging loans are something that could potentially be considered as a house deposit. So a bridging loan is essentially an interest-only loan that's meant as a short-term measure to bridge the gap between incoming debt and the line of credit becoming available. So essentially, if you wanted to buy a property, particularly in a speedy time manner, then a bridging loan can be used in circumstances like that. Now, there are pros and cons to bridging loans. They often come with high interest rates, hence why they're typically used for short-term financing. But for example, if the sale of your existing property is taking time to go through and you've seen a new home that you want to snap up quickly, that's an example of where a bridging loan may be something to be considered. Now, remortgaging is not usually an issue for most lenders, as I said, as long as the source of funds can be evidenced in most cases, and depending on the loan to value, not just the loan to value that you will be increasing the existing property to, but also of the onward purchase. Some lenders can stipulate in their criteria that they'll only allow that up to a maximum loan to value. Loan to value being the mortgage amount expressed as a percentage of the purchase price of or the value of the property. So that's just something else to be wary of. Now let's look at equity loans. So equity loans are something that are commonly accepted by lenders. Again, not every lender accepts an equity loan as part of your deposit. You will find the range of lenders willing to consider this type of loan to be limited, but it is something that can be considered. So for example, the Help to Buy scheme is a common form of equity loan that people would use to fund their house deposit. So how the equity loan in respect of the Help to Buy scheme works, you would borrow, say, 20% from the government to add to your deposit to go toward the purchase price of the property. Now, how the fundamental thing to understand, I suppose, with an equity loan is that if you borrow 20% of the purchase price, let's say today the purchase price is £100,000, let's keep it simple. That would be £20,000 that you've borrowed. If the property price 10 years from now had doubled and gone up to £200,000, then you would owe the government, in this instance, £40,000 instead of the initial £20,000 that you borrowed. So that is a key point in terms of the concept of how an equity loan works. But ultimately, it is something that can be considered by lenders. Now, when I'm talking specifically about the Help to Buy scheme, because I'd say that's the most common type of equity loan that people use, there are obviously caveats and eligibility criteria for the scheme itself. The main two being that you have to be a first-time buyer and you have to be buying a new build property. There are other bits in the criteria as well, but I'd say that they are the main two key points to consider. But ultimately, it is something that can be accepted by many lenders. Now, remember guys, we are here to help you to arrange mortgages and help you through the house buying process. So if you're looking at different types of schemes or different ways to fund your house purchase, or ultimately you're at the stage where you've worked out how you're funding your house purchase and you just need help to the next step to get you on your way to purchasing the property, then head over to our website, which is dm.mortgage, and book in for a free of charge appointment today. In the appointment, we can help you work out what's right for your circumstances and help you on your way to purchasing that dream property. Now, we work with lots of lenders, high street and specialist banks to compare all of the options and find what's right for you. So head over to the website, dm.mortgage, and book in for a free appointment. If you've enjoyed today's video and it's been useful, then I'd really appreciate if you hit that subscribe button and the notification bell so that you never miss a future upload. And I'll look forward to seeing you in the next video.